Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, Bitcoin is currently bouncing from important support, while the US dollar is actually rejecting from critical resistance, which creates a massive signal that we need to pay attention to. So I'll be talking about that in just a moment. Definitely stick around. First of all, in case you do not follow me over on my Twitter, just yesterday, the Federal Reserve officially raised interest rates again by another 25 basis points, also known as 0.25%. And obviously, if you've been watching my recent videos here on the channel over the last 1 to 2 days, you would know that this was the expected outcome and that 25 basis point hike was already basically priced into the markets. So considering we got that hike and considering the press conference not long after that interest rate decision was relatively neutral, obviously we didn't really see any significant movement in the market over the last 1 day around the Fed meeting, because once again, that was the expected outcome. And now, in case you're wondering about future Fed meetings, the next Fed meeting or FOMC meeting is happening in September. And at least as of right now, based on current information, the market is currently pricing in a 78% chance of no change in interest rates at the next Fed meeting, and around a 22% chance of another 25 basis point hike at the next Fed meeting. So at least for now, based on what the majority in the market is currently pricing in, right now the market is basically pricing in for interest rates to no longer go to the upside. Basically, we're at peak interest rate right now based on what the majority in the market is pricing in. And just following along with what the majority in the market is currently pricing in, the market is expecting for interest rates to stay at this level for at least a few months, possibly around half a year. And then as we enter into early 2024, we could potentially start to expect interest rate cuts, which means interest rates coming back to the downside. Once again, simply based on what the majority in the market is currently pricing in. But obviously between now and then, these probabilities can change based on factors like inflation data, for example. And now, for some reason, some people out there are arguing that interest rate cuts are bearish for the market, because oftentimes we usually see interest rate cuts during times where the market is basically collapsing. But it's important to understand that correlation does not equal causation. So for example, in the 2008 collapse, when the market and the banking system were imploding back in 2008, the Federal Reserve obviously stepped in by cutting interest rates and announcing quantitative easing, basically printing money and bailing out the banks. But it wasn't because the Fed cut rates and started QE that collapse actually happened. Obviously, it was due to other factors, and in fact, that collapse probably would have been a lot worse if the Federal Reserve did not cut rates and start money printing. So as always, cutting rates and money printing is obviously a bullish force for the markets. It's just we often usually only see rate cuts during times where the markets are not doing too good, but obviously this time around, the rates have been a focus due to inflation. And so if inflation is coming back to normal and rates are already at a restrictive level, like for example right now at around 5.5%, then it makes sense for the Federal Reserve to start reducing rates at least a little bit entering into next year if inflation comes back down towards more normal levels. And now, considering the fact that markets are forecasting rate cuts potentially coming next year, that is technically bearish for the US dollar, because lower yields usually means less demand for the currency, in this case the US dollar. And this chart right here is the US dollar currency index, also known as the DXY. And obviously, as you can see right here on the 3-day time frame, ever since the end of 2022, the DXY, the US dollar currency index, has been on a downtrend, forming lower highs and lower lows. And in fact, just recently, over the last 1 to 2 weeks, we have seen a break to the downside in the DXY below this important horizontal level of support, which is currently acting as at least some short-term resistance, sitting at around 101.4 approximately. And now, if you're new to all of this, you might be wondering, what does all of this have to do with crypto and Bitcoin, for example? And well, basically, because we usually look at the Bitcoin chart with Bitcoin's value versus the US dollar, if the US dollar is going to the downside, that is usually good for Bitcoin when you value Bitcoin in US dollars. But on the flip side, if the US dollar itself is strong and gaining value, then when you value Bitcoin against the US dollar, that usually means Bitcoin is not doing too good because the US dollar itself is doing very good. And so essentially we have an inverse correlation between the DXY and the BTC to USD chart. For example, if we take a look at the Bitcoin to US dollar chart here on the weekly time frame, the candlesticks are the Bitcoin price, and this red line right here is the DXY, the US dollar currency index. And what we can see right here is during the exact same times where the DXY is in a major downtrend, that also happens during the exact same times where the Bitcoin price is very, very bullish. But on the other hand, obviously when the DXY is moving back to the upside quite strongly, that usually means Bitcoin is very weak in its value versus the US dollar. And so once again, right now, the DXY, the US dollar currency index, is in a clear downtrend on the larger timeframes. And this has been the case since around the end of 2022 and is technically still the case, which means as of right now, Bitcoin is technically looking very bullish when you're talking about the much larger timeframes and the multi-month long moves on the chart. And so bringing it back to the 3-day DXY chart, if we actually see a rejection in the DXY from this previous level of support, which is potentially now acting as new resistance, then in that case, obviously, as I just explained, that would be a very bullish signal for Bitcoin if we see a strong rejection from this level. But on the flip side, if we actually see a breakback above that level, that could be a shorter term bearish signal for Bitcoin. But even in that case, that doesn't necessarily reverse the larger trend at play, because obviously for that, we would need to start to form new higher highs and higher lows again. And obviously, at least as of right now, we're still a long way from that happening. And now, just before getting into some other important Bitcoin and Ethereum charts, first quickly reminding you that the World Series of Trading is open for registration right now. This year, there is a total prize pool of up to 8 million USDT, a Lamborghini Huracan, and multiple Rolex watches up for grabs. And for the 3rd year in a row, yes, I will be hosting an official cryptoworld team in the World Series of Trading, which any of you can join if you want to. And how it works is if the cryptoworld team places well in the competition, then any of you who join my team can potentially win a share in this massive $8 million prize pool. And basically, the more members that are in our team, the more of you that join the cryptoworld team, the better our chances are at actually placing well in the competition. So if you trade crypto anyway, you might as well check this out. And of course, I'll make sure to leave a link to this page right here where you can join the cryptoworld team in the description down below and in the pinned comment. In fact, it'll be the first link down below this video. But anyway, now getting into some other Bitcoin charts. This is on the daily Bitcoin chart. And obviously, as of right now, the price of Bitcoin is still playing out a bit of a rejection from this important resistance. And on top of that, as I've been saying almost every day over the last 2 weeks or so, we do have an active bearish divergence currently playing out, which basically means we should not really be expecting a lot of bullish momentum, at least in the shorter term here, because usually for a bearish divergence, we end up seeing either some choppy sideways price action or potentially a slight pullback in the price of Bitcoin as the most common outcomes. And obviously, we've seen exactly that as expected. And also, if you're looking at the daily Bitcoin MACD, this is also still looking more bearish than bullish. We have not confirmed a new bullish cross as of right now, which basically means we're still currently within a bit of a short-term correction phase here on the daily time frame. We're not looking overly bullish when you're talking about the shorter term, but obviously this is still currently occurring within a much larger bullish trend, as I just explained. And now, if you're zooming into a smaller time frame, taking a look at the 8-hour Bitcoin chart, obviously right now the price of Bitcoin is continuing a bit more of a short-term bounce from this important Fibonacci level of support, which is the 38.2% Fibonacci level, sitting at around 28.9k. So at least for now, that is the short-term support to pay attention to. But if that level actually does not hold up and we see a confirmed break below 28.9k, then in that case, we have the 50% retracement retracement level acting as support at around 28,000, and below that we have the important golden pocket area of support sitting in between 27,000 to 27.2k. And as for shorter term resistance, we could find some resistance at around 30,000, which was a previous Fibonacci level of support, once again now potentially acting as new resistance. And now if you're zooming into a much smaller time frame, taking a look at the 2-hour Bitcoin chart, obviously as I've talked about over the last 1 week or so, we do technically have a shorter term bearish flag pattern, which is currently active at the time of recording this video. But if we actually see a confirmed breakout in the price of Bitcoin back above this level right here, which is sitting at around 29.7k, then in that case, that would actually invalidate this previous bear flag pattern and invalidate this price target to the downside. And so at least for now, while the price of Bitcoin is still currently below 29.7k, technically speaking, this price target is still currently in play. It is still active, which is sitting at around 28,500. But once again, between now and that price target, there is obviously that level of support that I just mentioned earlier. And once again, it is important to understand that if we actually break back above 29.7k, then that price target is no longer in play. So that is the point of invalidation. And now, even in that scenario, we could also find some short-term resistance up here at around 30.4k. So just keep in mind, obviously, we still have levels of resistance back to the upside, even if we start to flip more bullish in the short term. But anyway, now getting into the Ethereum part of this video, this is on the daily ETH to US dollar chart. And right now, the price of ETH is still trading slightly above this important area of support, sitting in between around 1770 to 1820. And if you're looking at the daily Ethereum price oscillators, at least for now, these are still looking relatively neutral. We're not really seeing a lot of momentum on the chart, at least for now, which once again, as I've been saying almost every day over the last 1 to 2 weeks, this means that we should not really be expecting a significant movement here in the price of ETH, at least in the shorter term. And instead, we're likely going to see relatively mild price action, which means potentially a slight pullback or some choppy sideways price action, exactly like what we've seen over the last 1 week or so. And now, if you're zooming into the 6-hour ETH to US dollar chart, obviously, as of right now, the price of ETH is still trading below this previous ascending line of support, which is now acting as new resistance, and this is currently sitting at around 1.9k. So just keep in mind, even if we do continue this short-term bounce back to the upside, obviously we do have resistance around that area that we cannot forget about. And now, staying on the 6-hour ETH to US dollar chart, looking at the Fibonacci retracement tool from swing low to swing high, we have the 50% retracement level acting as support at around 1830. And so obviously that's pretty much exactly where we saw a recent bounce in the price of ETH. So at least for now, that is the level of support to pay attention to. But if we actually saw a break below around 1830 to 1820, then in that case, obviously that would be a short-term bearish signal, and we would likely see a drop down towards this golden pocket area of support sitting in between around 1760 to 1770 if that level does not hold. And as for short-term resistance, right now the price of ETH is running into a bit of short-term resistance at around 1870 to 1880. And once again, we still have that resistance at around 1.9k. But if we actually saw a break back above that level, then in that case, I would also expect resistance at around 1930. And now, if you want to know how to make a lot of money very easily in the crypto market, no matter if the price is going to the upside, to the downside, or simply chopping around sideways in the short term, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how to make money no matter what direction the price goes using AI, and the video in the bottom left shows you how you can make easy profits in a sideways price range. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.